The April Consumer Price Index (CPI) report has generated a great deal of discussion among market analysts, policymakers, and economists. The CPI, a vital indicator of inflation, sheds light on variations in the costs of a variety of consumer goods and services. Reactions to the April report, which showed ongoing inflationary pressures, have been mixed as far as how it affects the economy, monetary policy, and the average consumer. This video delves into the diverse responses from experts to the CPI report released in April. It analyzes the subtle differences in their viewpoints and the wider economic landscape. Comprehending the CPI report for April. Let's review the main conclusions of the April CPI report before digging into the expert responses. According to the data, the overall CPI increased by 5% year over year and by 0.4% from the previous month. The volatile food and energy costs are removed from the core CPI, which also showed a notable increase, rising by 5.5% annually and 0.3% month over month. There were noticeable price rises in housing, transportation, and healthcare, but there were also slight decreases in certain other categories, such as automobiles and clothing. Economists' reactions. Using their respective economic models and points of view, economists have been attentively examining the April CPI report and have offered a variety of interpretations. Concerns about persistent inflation. A lot of economists voice worries about inflation's ability to continue, especially with regard to the core CPI. James Knightley, chief international economist at ING, believes that the Federal Reserve may need to stick with its hawkish interest rate policy for an extended length of time due to the ongoing inflationary pressures. Knightley pointed out that the ongoing rise in core CPI indicates underlying inflationary pressures remain robust, necessitating continued vigilance from the Fed. Labor costs and supply chain interruptions. Experts have also looked at the connection between labor costs and supply chain interruptions and inflation. Grant Thornton chief economist Diane Swonk emphasized how labor cost increases and supply chain constraints are driving up pricing. According to Swonk, disruptions in global supply chains coupled with increased wages are pushing up costs for businesses, which are then passed on to consumers. Possible effect on consumer spending. Considering that consumer spending is a major force behind economic growth, several economists are worried about how rising prices may affect it. Prolonged inflation may reduce consumer spending power and impede economic recovery, according to Moody's Analytics chief economist Mark Zandi. According to Zandi, if inflation continues to outpace wage growth, consumers may cut back on spending, which could slow down the overall economy. Views from market analysts. The ramifications of the April CPI report for financial markets and investment strategies have also been discussed by market analysts. Interest rate hikes and market volatility. The possibility of persistent inflation has raised market volatility, anticipating of additional interest rate hikes by the Federal Reserve. Charles Schwab's chief investment strategist Liz Ann Saunders offered her thoughts on how the CPI report would affect market movement. According to Saunders, higher than expected inflation figures could prompt the Fed to raise rates more aggressively, leading to increased volatility in equity and bond markets. Sectoral effects. Market watchers are keeping a careful eye on how various industries are handling inflationary pressures. While some industries, like consumer discretionary and technology, are thought to be more susceptible to rising interest rates, others, including energy and finance, might actually gain. According to Goldman Sachs chief U.S. equity strategist David Kostin, investors should be strategic in their sector allocations, focusing on areas that can either pass on higher costs to consumers or benefit from a rising rate environment. Inflation-linked assets. Due to the ongoing nature of inflation, interest in inflation-linked assets is rising. Investors should take into account assets that provide protection against inflation, such as Treasury inflation-protected securities, TIPS, and commodities, according to John Bellows, portfolio manager at Western Asset Management. Bellows clarified, in an environment of rising inflation, it's prudent to diversify portfolios with assets that can hedge against inflationary risks. Perspectives of policymakers. In order to maintain economic growth, policymakers must strike a balance between the problems presented by the April CPI report and inflation management. The dilemma of the Federal Reserve. The challenge for the Federal Reserve is to combat inflation without impeding economic expansion. The Federal Reserve's commitment to managing inflation through monetary tightening has been reaffirmed by Chairman Jerome Powell. Powell did, however, also see the possible dangers to economic expansion. He said, "We are committed to bringing inflation back to our target levels, but we must be cautious not to undermine the recovery process." Fiscal policy considerations. Policymakers are thinking about ways to lessen the financial strain that growing costs are placing on people. Increased social expenditures, tax breaks, and targeted subsidies are a few of the recommendations. While monetary policy plays a crucial role in controlling inflation, we must also explore fiscal measures to support vulnerable households and ensure equitable economic growth. Treasury Secretary Janet Yellen stressed the need for a balanced approach. Worldwide coordination. Since the world's economy are intertwined, worldwide coordination is crucial to combating inflation. The International Monetary Fund's IMF Managing Director Kristalina Georgieva urged cooperation in efforts to control inflationary pressures and stabilize global supply chains. Georgieva stated, "Global inflation requires a coordinated response, and we must work together to address supply chain disruptions and support sustainable growth." Business executives' views. Leaders in business are managing the difficulties posed by growing expenses and modifying their tactics to lessen the effects of inflation. Pricing strategies. In order to offset rising input costs, several companies are updating their pricing plans. Apple CEO Tim Cook emphasized the need for innovation and flexible pricing. According to Cook, in an inflationary environment, it's crucial to maintain pricing power and find innovative ways to offer value to customers. Cost management. Another crucial area of emphasis for companies is effective cost management. General Motors CEO Mary Barra stressed the significance of streamlining processes to cut expenses. According to Barra, we are implementing efficiency measures and exploring cost-saving technologies to mitigate the impact of rising raw material prices. Technology investment. Purchasing automation and technology is thought to be a long-term way to combat growing labor expenses. Microsoft CEO Satya Nadella talked about how technology may boost output and lessen the need for manual labor. According to Nadella, by investing in advanced technologies and automation, businesses can improve productivity and manage labor costs more effectively. Concerns of consumer advocates. Advocates for consumers are especially worried about how inflation would affect people with low and moderate incomes. Erosion of purchasing power. As a result of inflation, consumers' ability to afford basics is weakened. Elizabeth Warren, a consumer advocate, emphasized the importance of consumer protection laws. Warren stated, "We must ensure that rising prices do not disproportionately affect low and middle-income families, and we need policies that provide relief to those most in need." Calls for tougher regulation. To stop price gouging and guarantee fair pricing procedures, there are calls for stricter regulations. The Consumer Financial Protection Bureau, CFPB, Director Rohit Chopra emphasized the importance of being watchful. According to Chopra, we must monitor markets closely to prevent exploitation and ensure that consumers are not unfairly burdened by rising prices. Financial education. It is believed that promoting financial education is essential to assisting customers in managing inflation. Advocates for consumers are pushing for initiatives to raise financial literacy and provide them the capacity to make wise decisions. Financial education is crucial in uncertain economic times. We must give customers the information and resources they need to properly manage their finances. In summary, experts from a wide range of disciplines have responded to the April CPI report in a variety of ways, illustrating the complexity and diversity of inflation. While corporate executives modify their tactics to deal with escalating costs, policymakers must delicately strike a balance between reining in inflation and fostering economic growth. Consumer advocates stress the need of fostering financial literacy and safeguarding disadvantaged households. As the discussion goes on, it becomes evident that combating inflation necessitates a coordinated and comprehensive strategy. If you enjoy our video, please remember to hit the bell button for more updates in the future. You can also like, subscribe, and share it with your friends and family.